The country's current account deficit improved marginally in the first quarter. It narrowed to 35.6 billion rand from a revised 39.3 billion rand previously, driven by a smaller deficit on the services income and current transfer account. However, as a percentage of GDP, the deficit remained unchanged at 0.5% from the fourth quarter. Looking ahead, economists believe the trade account surplus is likely to decrease further as heightened levels of uncertainty around tariffs persist. A private mining and metals trading company is eyeing Jubilee Metals' South African chrome and PGM assets. The diversified metals producer has received a binding offer of up to $90 million for the operations. Jubilee's board has reviewed the offer and acknowledges the value proposition, but the deal remains subject to shareholder approval and a number of other customary conditions. Sticking with deals, Abu Dhabi-based mining company International Resource Holding has acquired a 56% stake in JSE-listed Alphamin for 6.5 billion rand. This majority stake will grant it access to Alphamin's flagship asset in the Bissi tin complex in the DRC, which supplies 6% of global tin output, along with other critical minerals at the forefront of the green energy transition. The transaction, however, is conditional on the receipt of regulatory and internal corporate approvals. AO Technology Solutions is in hot water with the JSE. The boss has imposed a public censure and a fine of R500,000 rand on the company. This as the tech investment group has been found to be in breach of the JSE's listing requirements as far as disclosure is concerned. AO failed to timeously disclose the terms of a settlement agreement between it, the PIC, and the Government Employees Pension Fund relating to the repurchase of shares back in 2023. The JSE says that lack of timely disclosure may have affected shareholders' ability to make informed decisions, potentially undermining transparency and fair market practices. Satao and Undu are hoping to settle a wage dispute with PRASA. Tuesday, the 17th of June, has been set aside for a CCMA-backed conciliation process in order to do so after the rail operator's management failed to table a wage offer on May the 10th. The two largest unions at the embattled rail agency declared a dispute in March when PRASA refused to table a formal wage offer. It's worth noting that the decision to refer the matter to the Labour Dispute Resolution Body comes after 3 failed attempts to initiate wage negotiations for the 2025-26 financial year. In executive shifts, Nepi Rockcastle has advised that its CEO Radiga Dani will conclude his tenure at the end of March next year. This after 5 years at the helm. Dani was instrumental in growing the company and entrenching Nepi Rockcastle as a leading retail real estate player in Central and Eastern Europe. He steps away to continue his career in international commercial real estate, retail and consultancy. In the meantime, Nepi is assessing internal and external candidates to succeed him. Further afield, Pan-European Consumers Organization BEUC filed a complaint with the European Union Commission against online fast fashion retailer Shein over its use of dark patterns tactics designed to make people buy more on its app and website. Let's take a look for more detail.
Fast fashion retailer Shein has been accused of manipulating shoppers. European consumer group BEUC said it uses so-called dark patterns to push people to buy more. It's filed a complaint to the European Commission. That cites practices including pop-up ads that tell people they will lose promotions if they leave the app. The group says Shein also uses countdown timers to create pressure to make a purchase. And it says the firm sends excessive notifications, with one phone getting 12 in a day. In a statement, Shein said it was working with the Commission and consumer bodies to make sure it complied with EU laws. It said BEUC had not accepted its request for a meeting. The consumer group has also targeted Shein rival Temu in a previous complaint. Both firms have grown rapidly in Europe, helped by apps that turn shopping into a game. In Shein's Puppy Keep game, for example, users have to feed a virtual dog and collect rewards to get free items. They can get more points by using the app and making orders, but have to log in every day or risk losing cumulative awards. In a separate move last month, the Commission notified Shein of practices that breach EU law and said it would face fines if it didn't address the concerns.
And on the back of the popularity for cultural exports and their roaring online sales through Amazon, South Korea's cosmetic startups are making a big push to supply major US retailers. Here's more detail in this report.
First, it was BTS and other K-pop megastars conquering the US market. Now, South Korea's K-beauty brands want to repeat the trick. The country's cosmetics firms are planning a big push into the US, and they're undeterred by tariffs. Beauty brand Tier will be one of the first, after its foundation for dark skin tones became a viral sensation. Its products will be sold at some US stores from this summer. Company chief executive An Byung-jun has no doubt what made the move possible.
K-culture, 그러니까 우리 예전에 이제 싸이도 있고 BTS도 있고.
K-culture, things like Psy in the past, BTS, and then Korean dramas and films like Parasite, those really paved the way.
그런 것들이 사실 먼저 선행을 했던 것 같아요.
Also heading stateside is South Korea's dominant beauty retailer, Olive Young, which plans to open its first US store as early as this year. Then there's Dalba Global, known for its vegan serums and tone-up sunscreens. It's talking to Costco, Target and other retailers, and company overseas business director Myung Jae-hoon says the rush of new brands to the US will make marketing vital.
많은 K-뷰티들이
Since many K-beauty brands are entering the market around the same time, it's going to be even more important for each brand to clearly differentiate itself. Without establishing a strong brand identity, it could become difficult to stay competitive. That's how I see it.
조금 어려워질 수 있지 않을까 그렇게 보고 있고요.
Demand is already booming for South Korea's top 5 cosmetics brands, with US online sales rising at an annualized average of 71% over the past 2 years. But the Korean firms can't escape Donald Trump's tariffs on the country's goods, currently 10% but set to rise to 25% if there's no trade deal. Tier says it will have to raise prices if the higher rate kicks in, but it's still aiming to double its US sales this year. Tariffs or no tariffs, American consumers are about to get the K-beauty treatment.